Hello and welcome to Money Times, and we have with us again Edmund Shing of BCS Asset Management and of The Idle Investor. Nothing idle about Edmund, however. Edmund, you're writing for us this week in your column on IBTimes UK about the UK property market. Now, what fascinates me is that estate agents are invariably talking the market up, but very often that doesn't seem to be reflected in their financial results, does it?
No, you're absolutely right, George. They obviously have a vested interest in pushing house prices up. But when we looked at Foxtons, which is a high-end London-based estate agent, looked at their results, they had to come clean and say, actually, profits are going to be way below where they thought they were going to be. So clearly there has been a significant cooling off of the London property market, particularly at the top end, and that is hitting their sales.
I always thought Foxtons were young men in hot hatchbacks with hangovers, but we must of course listen to what the property experts have to say, mustn't we?
Well, I think people feel that they've been pressured into buying housing, particularly of late in London and the southeast, as prices seem to have been rising inexorably. But the reality is that prices do not go up forever. Prices have been running way ahead of general inflation and, more importantly, ahead of wage inflation. And so property has become less and less affordable. And at some point, people say enough. And I think that time is now.
And when London catches a property cold, the rest of the country presumably goes down as well, does it?
Well, London does tend to be the leader, George. I think the southeast would be the next area to suffer from the cooling down as that sort of ripples outwards. If you go to the northwest, Wales, difficult to see that happening soon because none of those areas have had the same rise, the same gain in prices as London has seen over the last few months.
Now, I remember a dinner party conversation of only a few years ago when friends were all talking about the importance of buy-to-let. You know, that the thing to do is to buy property and let it because the rental market was booming as the purchase market was falling away. Does that still hold true?
The rental market in London and the southeast is still buoyant, absolutely no trouble there. The rents are still rising. However, the question is all about what rental yield a buy-to-let investor who is coming to the market today can get with these very high prices. My point in the column was simply that, firstly, rental yields are not very high. Secondly, that there are a number of risks that are always overlooked by new buy-to-let investors, including maintenance costs, stamp duty, tenancy vacancy, the risk of vacancy, and a number of other costs and risks associated with buy-to-let. These all have to be taken into account.
A lot of people have had their fingers bitten, haven't they, in the buy-to-let market in recent years? Yeah?
I think that's right. I think, you know, they believe that they're going to get these fantastic returns. And the reality is often somewhat different, particularly when you factor in all the taxes, both property taxes and, of course, capital gains tax that you have to pay.
Now, of course, so many people own their own properties these days that the talk is always about the value of property increasing and therefore enriching people. But when property goes down, there's great opportunity for purchasers. And I'm thinking that this winter and into next spring might be a good time for purchasers to start getting into the market.
You make an excellent point there, George. I mean, when you look at the seasonal effect on property prices in the UK, there is a clear negative effect, particularly December and January. If you look over the last 30 years, prices have on average gone down in each of those 2 months. So my advice is start looking around, but expect prices to fall back, expect asking prices to fall, also expect the discount you can demand on top of the asking price to widen as well, and maybe get in around the end of January and into February when prices probably will bottom out.
And the irony, of course, of that is that purchasers piling in when the prices fall off could push those prices up.
That unfortunately
is how markets work.
That's exactly how they work.
So if you are looking, you live in France, Ed, are you looking for a pied-à-terre in London? When would you buy?
I would be looking around the end of the year. I'd be waiting for the weather to be at its most ugly and worst, because that's when viewing houses is terrible and that's when the prices are lowest generally.
Well, thank you very much, Ed, for your insights today. And you can read Edmund Shing in his column on IBTimes UK. And the message, I think, on UK property is very much wait for the filthy weather if you're looking for a bargain in the UK market. So thank you, Edmund. Look forward to seeing you next time.